Arun Daniel, one stock you like in the JOHCM Small Mid Cap Equity Fund is Masco. Now this stock really broke out after it beat the street in July. I think it's up around 20% so far this year. So can it build on those gains?
Yes, Masco is an interesting play on housing. What we are seeing with Masco is really an opportunity for them to not only improve top line over the next 2 years because of the fact that all their segments are growing rapidly, but also an opportunity to improve their margins because the cabinet division has been depressed. So as we go into 16 and 17, you're going to see margin expansion there. So while the top line is going to grow only 6%, you're going to see earnings growth in excess of 20%. So that has not been fully realized yet in the stock. And so we believe this will outperform the market.
And you're also a fan of Signet. This stock is up, I think, over 15% in just the past month. Had a huge beat not too long ago. And it's also outperforming Tiffany. So yes. How are these guys selling jewelry and making more money than Tiffany?
Yes, and they both have different segments of the market they're going after. Tiffany is clearly higher end than Signet. And what's interesting with Signet against Tiffany is Signet is primarily domestic. So they don't have the Forex exposure or the China exposure that Tiffany is dealing with. The second interesting point with Signet is Signet has recently acquired, as you know, the K Jewelers. And so there is a lot of opportunity, low-hanging fruit, if you will, on the integration. So that is yet being realized by the street. So over the next 2 years, we are going to see top line improvement and margin expansion combined, driving outperformance.
And you are also a fan of Ralph Lauren. These shares are down about 40% this year. So what's it going to take to get Ralph Lauren back into fashion?
Yes, Ralph has had a challenging couple of years, if you will. They've gone through some senior management changes, had exposure to both China and Japan, where they had some issues. Now there is a new management in place, and they are really going through a restructuring plan. And this is really a restructuring story. So what you're going to see over the next 6 to 12 months is gradual improvement in the top line, mid-single digits. At the same time, they're also putting in place a cost reduction plan, where you're going to see margin improve as well as pricing also comes into play. So when you put all three together, you're going to see quarter-over-quarter improvement over the next several quarters. So if you have a 12 to 24-month window, this stock has an opportunity to outperform the market, and we think it can move 30% from here.
All right, and then finally, you like Lennar. Stocks up around 17% so far this year. The home builders have been doing very well this year. But if the Fed raises rates and mortgage rates move up, will this undo all those gains?
I think the Lennar has a great opportunity in housing because, number one, all the improvement that you've seen so far in housing is coming from mid to higher end. Lennar has exposure to the first-time buyer in the market. They're just beginning to come into the market. So we believe that has at least a decent amount of 12 to 24-month run over the next couple of years. So the other thing unique about Lennar is they own a lot of real estate, and the real estate portfolio is going to help them to maximize the market share and improve the market share. Number three, they recently announced that they're going to go after the multifamily market, and they're setting up a fund for that to finance. As you know, the apartment market has been really hot, and that's only going up. So those three things will really help Lennar to outperform the market.
All right, well, thanks a lot, Arun.
Thank you.
And thank you for watching The Street.